We think we'll probably have a prototype sometime next year.
Weekly Elon Musk news. If there is one thing Elon Musk knows how to do and do well, is remaining a constant trending hot news topic. Let's take a look at the latest happening all the way from the world of Elon Musk. Twitter investors sue Musk. Billionaire Elon Musk was recently sued by Twitter Inc. investors, claiming he manipulated the company's stock price downward, as the chief executive of electric car maker Tesla Inc. mounts a $44 billion takeover bid for the social media platform. The investors said Musk saved himself $156 million by failing to disclose that he had purchased more than 5% of Twitter by March 14. They asked to be certified as a class and to be awarded an unspecified amount of punitive and compensatory damages. They also named Twitter as a defendant, arguing the company had an obligation to investigate Musk's conduct, though they are not seeking damages from the firm. The investors said Musk continued to buy stock after that, and ultimately disclosed in early April that he owned 9.2% of the company, according to the lawsuit filed in a San Francisco federal court. By delaying his disclosure of his stake in Twitter, Musk engaged in market manipulation and bought Twitter stock at an artificially low price. Revisiting the Twitter financing plan. Musk just revised the financing plan for his proposed $44 billion purchase of Twitter, raising investor hopes that the unpredictable billionaire still intends to pull off a deal roiled by market turbulence and Musk's not entirely explicable concerns about the number of fake accounts on Twitter. The news overshadowed Twitter's regularly scheduled annual shareholder meeting earlier on Wednesday. Shareholders didn't address the Musk deal directly. That vote will be scheduled for an as-yet undetermined future date, should the deal proceed. Twitter shares jumped 5.5% to $39.22 in aftermarket trading, building on a 3.9% rise during regular trading. The financing changes outlined in a regulatory filing would shave $6.25 billion from the lending package Musk had previously lined up for the Twitter buyout. That means Musk will need to raise that sum in stock commitments instead of debt. That would bring the equity, that is, stock-based portion of the deal, to $33.5 billion, up from the $27.25 billion Musk disclosed 3 weeks ago. The filing with the Securities and Exchange Commission didn't go into much detail on where Musk will get the additional equity, but emphasized he is still trying to persuade his friend and former Twitter CEO Jack Dorsey, a supporter of the buyout, to throw his stock into the financing package. Dorsey, also a Twitter co-founder, owns a 2.4% stake, currently worth about $700 million, based on the company's closing stock price. Musk owns a nearly 9.6% stake worth $2.7 billion. Paying $250,000 to silence accusers. SpaceX reportedly paid an employee $250,000 to settle a claim made by her that she was harassed by the company's founder, Elon Musk, in 2016. According to the report, the payment was made in 2018 to an unidentified flight attendant who worked as a contract employee for a SpaceX corporate jet. The incident occurred during a flight to London. According to interviews and documents obtained, the employee accused Musk of revealing his privates to her, rubbing her leg without consent, and proposing to purchase her a horse in exchange for a less-than-platonic massage. One of the flight attendant's friends told media about the allegations after the attendant's attorney requested him to sign a declaration supporting the claims in 2018. According to the report, the flight attendant declined to perform any such acts on Musk and that she was really upset after the flight. The flight attendant complained to SpaceX's HR department in 2018, claiming that her career had suffered as a result of her refusal. According to reports, the firm brought the complaint to a mediator rather than a court or an arbitrator, and the attendant signed a $250,000 severance agreement prohibiting her from criticizing Musk or his companies, including SpaceX and Tesla. This included discussing the payment in general. Musk announces litigation department. Following recent misconduct charges, Tesla and SpaceX CEO Elon Musk announced that he will create a hardcore litigation department over which he will be in control. On Friday, Musk tweeted that the team will seek victory in a just case against us, even if we will probably win. He continued saying that his new team would never surrender or settle an unjust case against us, even if we will probably lose. He went on to add that he was looking for hardcore street fighters, not white-shoe lawyers, and that there will be blood. Musk asked prospective candidates to share 3 to 5 bullet points showing evidence of exceptional ability. Some Twitter users mocked Musk for finding the best legal brains on social media, while others presented humorous points, just as the Tesla CEO had requested. Because if I wanted to assemble a team of the finest legal minds in the world, the first place I would go would be Twitter. Absolutely, a user said. Musk then took to Twitter the next day to denounce as utterly untrue claims in a news report that he had harassed a flight attendant on a private jet in 2016. I have a challenge to this liar who claims their friend saw me exposed. Describe just one thing, anything at all, scars, tattoos, that isn't known by the public. She won't be able to do so because it never happened, Musk tweeted. Musk furious over Tesla cut from S&P 500 ESG index. An S&P Dow Jones Indices executive told media that it has removed electric car maker Tesla Inc. from the widely followed S&P 500 ESG index because of issues including claims of racial discrimination and crashes linked to its autopilot vehicles. And Tesla CEO Elon Musk responded with harsh tweets, including that ESG is a scam. In its changes, effective May 2, the Sustainability Index also added soon-to-be Musk-controlled Twitter Inc. and oil refiner Phillips, while dropping Delta Airlines and Chevron Corp., according to an announcement. The back and forth over the index changes reflects a wider debate about the metrics used to judge corporate performance on environmental, social, and governance, or ESG issues, a growing area of investing. Tesla has become the most valuable auto industry company by pioneering EVs and expanding into battery storage for electric grids and solar power systems. Factors contributing to its departure from the index included Tesla's lack of published details related to its low-carbon strategy or business conduct codes, said Margaret Dorn, S&P Dow Jones Indices head of ESG indices for North America, in an interview. Tesla's new robot worth more than car business. Tesla's humanoid robot will one day be the most valuable part of the company's business, CEO Elon Musk has predicted. Musk said on Tesla's first quarter earnings call that the importance of the robot, dubbed Optimus, will become apparent in the coming years. I was surprised that people do not realize the magnitude of the Optimus robot program, Musk said Wednesday evening. Those who are insightful or who listen carefully will understand that Optimus ultimately will be worth more than the car business and worth more than full self-driving. That's my firm belief. Musk said that the first models of the bipedal robot would arrive next year, though experts are skeptical about that timetable. Musk is known for giving overly optimistic predictions. He is years behind schedule on a 2016 promise that Tesla would deliver self-driving cars since by 2017, and recently said that Tesla is not currently working on a $25,000 self-driving vehicle that he said in 2020 would launch by 2023. Musk first announced the robot last summer at Tesla's AI Day, a series of tech talks hosted by the company to recruit machine learning talent. In the announcement, Musk brought an actor dressed in a bodysuit designed to look like the robot on stage and had him dance for the audience. Musk said the goal was to create a machine that could drive labor costs down. That's all for this video, folks. See you another time.